I'm Kristen,
I'm Jen.
and we are test running out going live for actually the second time. We figured out that we could toggle and go live on YouTube actually earlier this week. So then Jen decided yesterday that she was going to just record something on Riverside, which is the platform we use to do all of this. And she was literally, I mean, actually, you tell the story, Jen, of what
I was
transpired.
trying to just make sure I could do a screen share. So I had an old real estate P&L spreadsheet up in my pajamas, yelling at my dog who was barking at the mailman. And Kristen gets a notification like, your YouTube live is ready. And I was like, oh my God. So I don't know how many people saw my 30-second clip from hell, but that was our first foray into YouTube lives. I think this one's going to be a little bit more successful.
You deleted that. I think we need to put that back up. I actually
disagree. If you go look at our recordings, it's still there. But no, we are so excited that we're going to be doing a live stream of the Fed on Wednesday. So if you guys want, please join us right at 2 p.m. I think we're kind of going to take a minute to read the statement, but we're going to be live with the head of fixed income at a global investment firm with over $650 billion of assets under management, because we wanted to give you guys a taste of what it's like being on the trading floor when this news breaks and how people are analyzing the statement. How, we've talked about this before. People will literally be like, that comma wasn't there before. Now there's a comma. And I think this is probably going to be the most exciting Fed meeting of the year, hands down. So we're really excited to see what happens. We're going to talk a little bit about what's going on in fixed income today. But yeah, please join us for that. We'll be here. We're on YouTube.
Yeah, apparently.
So definitely make sure you put that on your calendars, and we'll send something out on social media as well.
I was going to say the other thing that's so funny. So we obviously did our final A-Rod interview this past week. I mean, we had been, that had been in the works since January. So it's so exciting that it's actually finally out in the universe. But we were so excited about all the interviews we have coming up. And then we realized we actually had blocked this week because we didn't want to do an interview because we're trying to, Jen is obviously working on our sales and trading course. I'm trying to hammer out the financial modeling course. But next week, after we have this really cool YouTube live, we also are interviewing a head of macro, which brings me to another really fun story that Jen, literally when this happened, I wanted to talk about this and Jen wouldn't let me. So Jen, do you want to just tell our head of macro story really quickly that I feel like was also well, I remember you were very embarrassed at the time because a email that you had put out there was screenshotted and put on the internet.
So gosh, when we were first getting this podcast off the ground, we were relying so much on the charity of our friends and neighbors and former colleagues to come on our podcast. No one had heard of us. No one knew us. And whenever we'd get an inbound of so-and-so wants to be on your podcast, we'd be like, oh, this is amazing. Somebody has found us. And so we got an inbound from someone who was representing the head of a hedge fund and said, hey, the CEO of my new hedge fund wants to come on your podcast. Would you do a call with him? We said, this is great. We had never heard of this man before. We looked him up, and he had, some pretty impressive career history, which we'll get into in a second. And it now seemed that he was starting his own hedge funds. We're like, this is so cool. We had just done our hedge funds 101 episode. This was going to be a great follow-up. And we got on the phone with this man and had a wonderful conversation. And he said, hey, listen, I'm starting my own hedge fund, but I think one of the great things that we could do on your podcast would actually be a debate. I'm super passionate about debate. And we were like, wow, that's even better. With whom? And he said, why don't we do it with my old boss, David Einhorn, the CEO of Greenlight Capital. And Greenlight Capital is one of the most famous hedge funds out there. And we were like, yeah, amazing. Let's do it. Our fledgling podcast. We're going to have this friendly debate. This is going to be amazing. And he's like, yeah, I'm just, driving my car here. Type in, here's
David Einhorn's
CEO of this hedge fund's email address. Why don't you shoot him an email and suggest a friendly debate? And we did, because this sounds amazing. Who would suggest such a debate if this wasn't something that they clearly thought would be, of interest to the other party? And sent that email, didn't hear back, thought nothing of it. It turned out 24 hours later, that email was screenshotted and posted on Twitter and launched the now infamous, probably long since forgotten, head of macro memery that then stemmed from it. So the gentleman in question who had contacted us had been claiming to be the head of macro at Greenlight Capital. The CEO of Greenlight Capital questioned whether that title had ever actually been issued, and there was a whole back and forth that ensued. But what was so terrifying for us was we had this baby podcast, and we had this email that had been screenshotted to the world where I was like, why don't we have a friendly debate? Like, this would be so much fun. And I was like, oh my God, we're going to get sued. So I wrote an apology email to poor David Einhorn and said, I'm so sorry, I had no idea.
But Jen was so mortified. I felt so bad. I was like, you didn't do anything wrong. But anyway, so that's the two, I feel like, mortifying stories from Jen's. I don't know.
I could just sit here and tell embarrassing stories all day, and we would have an endless. This YouTube live would go on ad infinitum. But yes, we are interviewing my former colleague, whom I deeply admire and respect, Matt Hornbach, who is the global head of macro strategy at Morgan Stanley, our former alma mater, and he's amazing. So he's coming on. We've got during the Fed, after the Fed, like we are going to cover this Fed event like it's the Super Bowl. This is my Super Bowl. I'm so excited about it. This is going to be the biggest event of the year as far as the financial markets go. And we'll talk about what's been going on in the bond market. But Kristen, there is so much to talk about in deal news. I'd love it if you could like tee that up for our viewers.
It's not so much. I mean, look, it's not really quote unquote deal news. It's more, I mean, sort of our prior Super Bowl, which is like just anything that involves succession. And so the real world succession drama, I mean, the TV show, the HBO show is obviously based on the Murdoch drama. And so Rupert Murdoch has been in court basically fighting
for our international listeners who don't know who the Murdoch family is and what their business is. Can you just give a little background, given this is your complete wheelhouse?
Well, I mean, no. So look, Rupert Murdoch owns, Fox Corp, News Corp, which, I mean, Fox Corp, this actually is very interesting. So Fox Corp, prior to, call it 2019, it was 20th Century Fox, close to like $100 billion firm. They had tons of various media assets. And again, like I've said, I mean, this is the company off which Succession was based. They had, a ton of the actual almost like content library. They had, Fox Sports, they had Fox News, they owned the New York Post, like all this kind of fun stuff. And then in 2019, Disney bought the majority of those assets. So there was actually something called a spinoff. So the deal where Disney came in, they bought $85 billion worth of assets. There was then a spinoff. So there was like New Fox, which is now what we know as Fox Corp, which is it's a much smaller firm. I mean, it's like, a tenth probably of the size of what it was originally, but they did this massive deal, sold a significant portion of Fox to Disney. And what now remains is, again, this like Fox Corporation, where they, like I said, they own Fox News, Fox Sports, blah, 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 blah. And then he also owns News Corp, which is sort of the entity that has like the Wall Street Journal, HarperCollins, et cetera.
New York Post?
No. New York Post is part of Fox Corp.
Oh,
funny enough.
Oh, sorry. Oh,
yeah. Okay. Yeah. Oh, again, this was like, I would have assumed the New York Post was part of News Corp. That seems to make more sense, but it is not. It is actually part of Fox Corporation. So
I didn't know that. Anyway, learning something new every day.
There we go. So the point though is, so with a lot of these different types of companies, and this is like, again, I don't want to say TMI because like, this is what we do. It's like, there's like dual class shares, right? So there's two different types of shares, both at News Corp and at Fox Corp. And so there's class A shares and class B shares. The class A shares at both of these firms have, like regular people like you and me, like we can all buy into them, right? They're easily traded. And actually the class B shares are also traded on the public markets, but the class B have super voting rights. Now, the super voting rights are the types of shares that obviously the Murdochs have ownership of, right? So they have the majority control versus like, if you buy in, you are going to get an economic piece of the firm, but you are not necessarily going to get the same amount of control. So there is a family trust that holds a significant portion of those class B shares. And those shares cannot be sold to anyone outside of the family. And so basically—
Before we move on, one like novice question here. When you say both of those shares trade in the open markets, aside from the ones that can't be sold outside of that trust. So if I were to go to my investing platform here, right? Would I literally be like, oh, I'm, whatever the ticker symbol is, and then like there's a drop down to choose between class A and class B and it shows their relative price?
Yeah, well, that's how they typically work. In the case of this, I would be curious. I do not know what the liquidity is for that, class B share class. So I actually am
Totally
not sure.
understood.
Usually with these different types of shares, it's oftentimes, and I actually expected that it would be this other model. So with some shares like, Berkshire Hathaway, or I think like Hershey, like you have class A, class B, you can decide what you want to buy, whatever, it's easy peasy. And then there's a lot of times with these types of companies, you actually will have one class of share that trades and one that does not. And
Mm.
so usually the class B shares are not publicly traded, but then you can convert into class A and then you obviously can liquidate. Now, the exact mechanics of this particular class B, because I don't think that like they necessarily want regular people buying in. So I think this is why they have this in, again, like a trust. It's almost like a
Yeah, yeah,
lockbox and
yeah.
they cannot sell. But and so back to the point about like the liquidity, right? A lot of those shares are in this trust. So I don't know how liquid the class B shares are. And this is
Mm.
something that, someone who's actually a trader and like knows a little bit more about like how easy it is to potentially buy that would be a question for them. So, but
And
that's a really valid question.
yeah, it's just the
I just
kind of
don't know the
thing where
answer.
we've talked about this, right? You're usually very process oriented, and I'm more like hand wave, hand wave, hand wave. But sometimes I get really hung up on like, but where would I find it in like the drop down
No,
menu?
yeah.
And also, I imagine too, given like the different properties of these shares, that they wouldn't, were they to trade on the open market and be just a toggle, that they wouldn't trade at the same price, right? Because
And they
one
don't.
obviously comes with these different abilities with it, right? So
Yeah,
like, is
they
there an
don't.
ARB ever?
But they actually don't trade that much differently in terms of price. So that's why I'm still a little bit confused as to like just the liquidity situation. And so
If anyone's
anyway,
like a class A, class B arbitrageur and wants to explain this to us, like I want to take a class with you.
seriously. So the point though is when Rupert Murdoch was going through, I think, the divorce with his first wife and trying to marry, I think it was like Wendy Dang. I need to look up my
Mhm.
notes. No, his when he divorced his second wife, Anna Mann, he basically agreed to a deal with this trust where all four of, and actually he has more than just four kids. He has the four children. So it's Lachlan, who was the most ideologically aligned with him. I mean, it's
And
like the
that's like
eldest boy.
Kendall, right?
Well,
Yeah, like
I
in the
feel like it's
show.
almost more like Roman, but I mean, the eldest boy, I mean, he is the eldest boy and he's much more ideologically aligned. So, but like
Yeah.
to me, it's almost more of like a Roman type character for those of you guys who've seen the HBO Succession TV show. But so you have Lachlan, who is actually currently at the helm of Fox Corp right now.
Mhm.
And then you have his other three children. You have James, who is more, and I don't want to say like liberal, but just less like the concern that Rupert has is that if James, and his two daughters, Elizabeth and Prudence, get control, they can obviously have like more weight against Lachlan and potentially could like, I don't know, sell the business or make it more liberal or whatever, like go against what the wishes are of Rupert Murdoch. And
Rather
so,
than having it just be like a straight line continuum of
mhm,
whatever the business has been, again, the concept of succession. Yeah.
exactly. And so Rupert Murdoch and Lachlan, I guess, had been in court in Reno or in Nevada trying to essentially like change the trust so that it would mean that Lachlan was in control. Now, by the
Mm.
way, there's the controlling aspect, and then there's the economic aspect because he has two other children who I believe are also part of the economic interest of the
And
trust,
those are
but they
Wendy Dang's children
Yes,
or
yes,
okay,
but they don't have the controlling aspect. So it's
got
the issue is that the four children have the potential to control, and then if you have three of the kids, that's 75%. They can obviously like maneuver Lachlan if anything were to happen to Rupert Murdoch, because again, if he were to die, the trust gets split up evenly. So anyway, so they were trying to change the trust, and they got blocked by a court order, right? So
Mhm.
that was not going to happen. And so we found out, I guess, a few days ago that there was a settlement that Rupert and Lachlan, I guess, are going to be buying out the shares of the family, right, of the remaining siblings. And so then as a result, they're going to change the trust so that then Lachlan does have the controlling stake. And so it was interesting. I was trying to like look up the math because I saw an actual press release from News Corp, and apparently they're selling 14.2 million Class B News Corp shares. And again, so this is in like the trust,
Mhm.
the siblings can sell out. And then 16.9, but they're selling it to obviously the other sibling, right? So they would be bought out when I did the math and I looked at the share prices, I only get like 1.3 billion in terms of like the monetary value of that. So I'm not sure if that is per child, because I did hear that they are basically agreeing to be bought out at a discount, which is so interesting because typically when you think about like giving up control, it's typically at a premium. Now, I think one of the reasons that they agreed to do this in the first place is just that like, even though the judge ruled that they could not go through with this, that doesn't mean that they can't appeal it. And there's
they
a
just
lot
be
of
bled dry in legal fees for the rest of eternity.
And there's some very heavy hitters. I think Bill Barr is like one of the lawyers who is part of the legal team, but there's just tons of lawyers obviously involved in this whole thing. So I think that part of it was just, they were like, you know what, whatever, we're just going to call like truce or whatever, like surrender, like we're done. But they did agree to sell for something that was close to 80% of what the fair market value of those shares was. So that's kind of interesting. So again, when I did the math and I was like, 1.3 billion, is that per child? So I was a little bit confused as to like the math of it all, but it does look like and the other thing actually to keep in mind is, I mean, had they just waited it out, right? Had they not done anything, they would
Just
have been
waited
able
till
to sell.
Rupert died, I guess.
Well, yeah, but also so with the way that the trust was written, they could sell out of their shares. So part of the thing is, actually, let me rewind for 1 second. Part of the thing is that like I said, the shares that they have, their ownership is in this trust, and they cannot sell out until 2030. So they still have to wait 5 more years to sell out. So this basically gives them that cash liquidity now. Now, the thing is that I guess when the deal went through with Disney back in 2019, I mean, they each got paid $2 billion. So I'm like, why do you need to cash out now? But I do think, like I said, it's sort of the risk that that something happens and the court does end up. So this gets them to be paid, and like it takes the risk off the table, and it takes away the legal fees and all of that. And so anyway, so the immediate impact is like there's not really going to be any change because Lachlan has been in charge of the Murdoch business for the last few years anyway. But it does obviously like clear up the like long-term leadership uncertainty, and then the new trust that they're putting in, it expires in 2050. So that is the drama, and it's
And
so
speaking of the drama, we owe our listeners and viewers our season 4 recap of Succession, which we will probably try to fast track given Succession is back in the news. Shameless plug for Kristen's self-paced course, which is her everything you need to know for investment banking and private equity essentials class. She uses all of the drama of Succession as the case study. And then I continue that in our fixed income sales and trading course, which is hilarious because I'm just like, so Gojo bought Waystar. And then now let's talk about like these hypothetical bonds and blah, blah, blah. So I just keep referencing Gojo, but like it has nothing to do with the plot of the movie after that one sentence.
Well, no, but the thing is because like when in the course that we did for the investment banking and private equity is when you're doing any kind of valuation, like I'm basically like trying to value a fake business, which I mean, you cannot do. So obviously, I mean, first of all, you do need comps, and the best comps are the Disney deal where Disney bought the majority stake of Fox. So that's basically the deal we analyze in the precedent transaction analysis. And obviously our comp is Fox. And it was interesting too, because they were talking about, like I was listening to I Love the Town to kind of just educate myself about sort of this particular transaction. And they were talking about how, just there was like, if, for example, right, the main thing is this ideological divide between the kids. But, the argument that they were making was like, they were like, I don't believe that, James or Prudence or Elizabeth would take over and they would turn Fox into CNN. But what they might have done is maybe been a little bit less conspiratorial after the 2016 election. So Fox did have a almost $1 billion lawsuit against them from Dominion because they were claiming like the voting machines were changing votes or something. I don't remember exactly what it was. But anyway, so as we're doing our various like analyses and stuff, like I'm like, oh, the Dominion, it's like a non-recurring charge. So there's all this kind of cool stuff in it. But we basically analyzed Fox and the Disney deal as like our case companies for the comps analysis. So, and then when we're doing the M&A model and stuff, I do base it on like the actual Disney deal. So for me, like the Disney deal is like so fun. I'm like, oh, I just kind of like went through this whole analysis of this, and we pretend that it is Waystar, which the fictional company, like there are some differences obviously between Succession and like the real world. So it's funny too, because I mean, Rupert Murdoch is 94, and in Succession, Logan is like only 80. But he, at one point, they were talking about possibly having more kids, and so anyway, this is also a plug. If you don't watch Succession, like definitely it is worth a binge. So
yeah, it's one of the best shows of all time. I totally agree.
So switching gears, we are Jen. I know you had your unhinged rant, as I think you called it that actually, but about this like repocalypse that is, we are inching closer towards. It is currently
Monday,
September 12th, and tax day.
Does it feel like the apocalypse is nigh? And is it because your corporate taxes are due?
Yes. And so someone literally said, they were like, oh, you haven't talked about this. And we were like, well, it was literally in Bloomberg since we've spoken about it. So Jen, do you want to give us an update on what is happening with repocalypse?
No, yeah. So we had, just to refresh your memory, we had talked about the potential looming specter of the drain on what remains in the bank reserves of corporate tax day. So September 15th. And we referenced what happened in 2019, where infamously bank reserves dropped to a precipitously low level. And we saw short-term funding rates, so very, very short-term rates that people use to borrow money to then go buy assets like US Treasuries. We saw those funding rates blow out by something like 400 basis points over the course of like a day. And so in response to that, the Fed implemented something called the standing repo facility, which de facto puts a cap on how far those really short-term overnight borrowing rates can go. Now, you don't want to test that, right? You don't want to be like, well, the thing exists, right? It's like, we have Band-Aids, but like, let's not slice ourselves to pieces, right? So it's put there to stop the bleeding of like a totally catastrophic event. You don't want to be like, well, it's there, so everything's going to be fine forever if bank reserves drop precipitously low. So I had hypothesized that this looming event, which is known to the funding markets and has been evidenced by a slow creeping widening of Fed funds, tightening of Fed funds SOFR. And I always get the directions mixed up because I'm so used to the old LIBOR spread world. But basically what it's showing is that there's pressure in short-term funding rates. So Fed funds SOFR had been kind of hovering around that -3, -4 area. Today, it's down at -7.75 as of the time that we're filming. And that's an indication that stress is being priced into the system. Now, there's the September 15th date that we kind of need to get through to see if there's an impact on, obviously, the reserve levels to see where they end up, right? Corporate taxes, we just went through like trying to figure out our corporate taxes, but there's so many, like it's just an unknown how much will actually be drained. But then we have quarter end right after that. We have, the month end of September, which is another drain. And we've got auctions to get through. So the question is to what extent is there going to be or not be enough cash in the system? And will the Fed need to respond to that on Wednesday when we have the Fed meeting? So what's been going on in the bond market, generally speaking? We had talked previously over the course of the past month about the steepening of the curve that was initially led by a bull steepening where front end interest rates were moving lower. Those rates were rallying in response to the market increasingly pricing in the likelihood of a Fed ease. But long end interest rates were selling off. So the curve was steepening, led by both this independent action of front end rates rallying. I think my camera's reversed, so I'm hoping I'm doing this with the right hands because this is flipped from my standpoint, of front end rates rallying and long end rates selling off. And we had seen that in Europe, right? We had seen that increased term premium being priced into the long end. And there was this hypothesis that would happen after the introduction of the Big Beautiful Bill in America and this perceived lack of fiscal responsibility. But what we have now started to see is, okay, this Fed rate cut is fully priced in. Front end really doesn't have anywhere else to go, right? Like that move is done. And what ends up happening is something called a cash trap, right? So if you think about, these are some of the concepts that we get into the fixed income sales, trading, and investing course, or whatever we're going to call it. But if you think about how much each incremental basis point is worth when front end interest rates move versus how much each incremental basis point is worth in terms of value today when long end interest rates move, the magnitude of the value impact of each basis point move when you have a long dated instrument is much, 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 much higher than when you have a short dated instrument. So if these rates rally 1 basis point and these rates rally 1 basis point, they're worth very different amounts. Nothing really happens to your P&L. You don't really make much money if these rally 1 more basis point. And they've already come so far down. Where are they really going to go from here unless you get a big surprise ease, right? So if you are looking to make money by investing in fixed income, you need to start moving out the curve. And that is what we call effectively a cash trap when you get yourself into these situations. So we have now seen over the past 7 days, a bull flattening where the long end of the curve is starting to rally and appreciate and richen in terms of yields. So I think 10-year notes have rallied something like 20 basis points since last week, and the long bond has rallied 30 basis points. So it's come down from very close to 5% to now call it like 468 or something like that. So everyone who was in curve steepeners, who was long the front end and short the back end of the curve in anticipation of this Fed policy move, is getting stopped out by this bull flattening move, is what appears to be happening. I think PIMCO came out and said that they were exiting their steepeners. So it's really interesting to see a bull flattening ahead of a Fed meeting. It means that the market is caught a little off sides all of a sudden. So if you are still long the front end, you need kind of a surprise from the Fed beyond what the market has priced in of this almost guaranteed ease to make any additional dent and to kind of make that long worth holding on to. And if you're short the back end, God help you. You've gotten carried out. So that's just been an interesting development that had totally pivoted from the market over the course of the past, call it month, when the curve was steepening out. That trade had been a great trade and it is no longer. It'll be interesting to see what happens after the Fed meeting, but people are going further out the curve in search of yield.
Well, that's why I'm so excited to talk about see what happens at the Fed meeting. This is why Jen is so excited. And so I mean, the only other thing that obviously has been a huge story was Oracle shattering, their estimates, like earnings estimates. And I think they had a stock price, like their stock price jumped like something, set records. And Larry Ellison basically became now the richest man in the world. So overtaking Elon Musk. And there was a bunch of just sort of funny like chatter on, in the fin meme space where people were kind of like, what is Larry Ellison going to buy his son now? Because Larry Ellison's son, oh gosh, is it David Ellison? Is it? I'm like totally blanking on his name, but he's the one who is who put in the bid for Paramount, and that deal has gone through, like Skydance, Paramount, and now it looks like he is looking to make a bid for Warner Discovery, I believe. So it was so funny that there was all this stuff like, what is he going to give his kid? And then it's like, so not that this is because, you know what I mean? Like it's not, but it was just such a funny little, I don't know, thread, if you will. Anything else, Jen? What?
No, we just have so much that we're excited about coming up. We've got some travel on the calendar for next month already. And so Wall Street's getting agenda. We've got the live stream of the Fed Wednesday at 2 p.m. So be here on YouTube. We are so excited for that. That's going to be absolutely a banger. And also because we're bringing this expert on, you're not just going to get my thumping around being like, oh my gosh, it's a semicolon, but you're going to have someone who is way, way, way more of an expert than we are, who's going to give his real-time take. And then on September 30th, we are hosting a free live masterclass to celebrate the upcoming launch of the fixed income sales and trading course. So we will be, we'll start sending out information about that probably in the newsletter today. And then beyond that, no, sorry, go ahead.
Yeah, I was going to say in the newsletter today, we're going to be covering basically everything that we learned from almost like our conversation with A-Rod and like some of the Moneyball stuff we did. So it's going to be in anticipation also of, well, I guess it happened last week, kind of like or maybe the week before, like the football season kickoff, but and Jen's Super Bowl. So it is going to be just like a sports investing 101. So if you don't already listen, or if you don't already subscribe to the newsletter, it's just another way that you can like learn with us if that is helpful. So definitely subscribe, and it's free. Yeah. So just putting it out there. News.
Awesome.
Yeah.
We also use the newsletter too. When we do our Ask Me Anythings on social media, we get dinged all the time for people being like, you wrote too much. And I was
Oh,
like,
God,
did
I
you
know.
want an answer or not? So when we have a lot to say in response to your questions, we save those answers for the newsletter. So make sure you're subscribed so you can get those. But dude, 30 minutes, YouTube live, done and dusted. I feel great. I hope you're feeling great. I'm excited.
I am.
If you're a regular podcast listener, we'll obviously air this on the feed on Saturday. And if you're following us on YouTube, thank you so much. Please share the show with a friend. And we're so happy you're here.
Awesome. Well, we'll see you next week.
All right, bye.
Bye.